Hi everyone, welcome to lecture number 23, the second lecture on human capital. In our last lecture, we discussed about the investment decision in human capital. We discussed about how individuals who invest in schooling are willing to give up earnings today in return for the higher earnings in future. We have seen that how the individuals they discount their age earning profile into the present value and choose that whichever the present value gives them the maximum return, they choose that option. So, whether to invest in higher education or they should go for the dropout. So, we discussed that how individuals they are willing to give up their earnings today in return of higher earnings in future. In this lecture, we will discuss about how a person should choose the level of schooling. What should be the maximum number of schooling, year of schooling, which maximizes the present value of earnings. So, we will discuss it about through the Wage-Schooling Locus. The Wage-Schooling Locus is known as the Mincer's earning function or Mincer's equation. This is a concept in labor economics that describes the relationship between wages and number of years of schooling or education. The term locus refers to the curve or the line representing this relationship between wage and number of year of schooling. So, when we talk about this Wage-Schooling Locus and through this Mincer's equation, this can be explained like wage is a function of number of years of schooling. So, you can see here in this equation, it is a quadratic equation. It has been written this log W here it has taken as the wage equals to beta 0 plus beta 1 s plus beta 2 s square plus epsilon. So, here S represents the year of schooling or education and log represents the logarithm of natural log of the wage rate and epsilon is the error term in this equation. So, beta 0, beta 1, beta 2 are the coefficients, they represent the impact of education on wages. So, when we look through this Mincerian equation, this Wage-Schooling Locus implies several key insights. It talks about that education act as a premium. So, higher level of education are associated with higher wages, which reflects that the additional skill and knowledge and the productivity gain through schooling. So, this education premium signifies the economic return to investment in education. So, here education act as a premium as we can see that higher level of education is associated with higher level of wages. Further, the return on this investment in education, the return is at a diminishing rate, which means while additional year of schooling generally leads to higher wages, the rate of increase in wages may diminish as the individuals attain higher level of education. So, it increases, but at a diminishing rate. So, this reflects the diminishing marginal return to education. So, where the incremental benefit of additional schooling decreases over time. Further, there is a non-linear relationship between this wage and schooling number of year of schooling. So, this Mincerian equation suggests a non-linear relationship between this wage and education, which is characterized by this curvature in the earning function. So, this curvature reflects the diminishing marginal returns to education, which is captured by this quadratic term beta 2 s square. Further, through this equation, we can identify the individual heterogeneity. Labor market is full of heterogeneity and each and every individuals they differ. So, the Wage-Schooling Locus acknowledges that the individual's differences in the returns to education exist in the labor market, like factors such as field of study or the educational quality or the individual characteristics that can influence the magnitude of this education wage relationship for different individuals in different contexts, so that you can find the outcome is different. So, there is some individual heterogeneity which can be captured through this Wage-Schooling Locus. Further, this Wage-Schooling Locus explains that there is some earning inequality exists. So, disparities in educational attainment contribute to the earnings inequality in the society. Individuals with higher level of education tends to earn more than those are with lower level. So, which amplifies the income disparities based on the educational differences. So, the overall Wage-Schooling Locus provides a framework for understanding the relationship between education and wages, which highlights the economic incentives for the individuals to invest in human capital through schooling and training. So, when we talk about this Wage-Schooling Locus, it represents the relationship between this wage rate and the number of year of schooling one should achieve. The rule that a person should choose the level of schooling is that maximizes the present value of earnings, which is obviously generalizes to the situation when there are more than 2 schooling options. So, the person would then calculate the present value associated with the each schooling option, for example, 1 year of schooling, 2 year of schooling, 3 year of schooling, and so on and so forth. So, the person would then calculate the present value associated with each year of schooling and choose the amount of schooling that maximize the present value of this earning stream over his lifetime. So, there is however, a different way of formulating this problem that provides an intuitive the stopping rule. Now, point is that where someone should stop, how much of year of schooling someone should get, at what point of time he should think that no, I have to leave the education and enter into the labor market. So, this stopping rule tells that individuals when it is optimal to quit school and enter the labor market. So, this alternative approach is useful because it also suggests that a way of estimating the rate of return to the education, which means the Wage-Schooling Locus is nothing, but it explains that simply the salary that the employers are willing to pay a particular worker for every level of schooling. So, when the individual is adding 1 more year of schooling, 1 more year of schooling, what is the salary that the employers are willing to pay? This is just the simple way of talking in a layman's perspective, that the Wage-Schooling Locus. So, let us take some example which will explain its much better way. Now, if the worker gets a high school diploma degree and his annual salary, let us say, is $20,000 per annum, whereas if he gets 18 year of schooling, his annual salary is going to be $30,000 per annum. So, the Wage-Schooling Locus in the market, it is determined by the market. So, what will be the wage rate per year? It is decided by the market. So, it is the year of education what the individual is going to get, that is up to the individual, and the individual has to take a decision that where he should stop. So, this Wage-Schooling Locus is mostly market determined and market driven, which means the salary of each level of schooling is determined by the intersection of this supply of workers with that particular schooling and demand for those workers in the labor market. So, the wage rate is simply decided based on the demand and supply of workers in that with that particular skill level or with that particular educational attainment. So, from workers point of view, the salary is associated with each level of schooling is constant. So, we can explain this Wage-Schooling Locus through this graph. So, on this uh, x axis, here we have taken the year of schooling, number of year of schooling, and on the y axis we have taken wage rate, which is determined in terms of dollar. Now, even if the worker is not having any kind of educational attainment, the educational level is 0, he is having some level of wages. So, it starts from a point on this y axis. Now, if somebody is going to get a diploma degree, a 12 years of schooling, number of year of schooling is 12 years. So, he is going to get a market wage rate is $20,000, and with this the point is A. Now, if he increases one more year from 12 to 13, one additional year of schooling, then the wage rate is going to increase from 20,000 to 23,000, which is having at point B. When he increases another more one more year of schooling from 13 to 14, then the wage rate in the market is 25,000, and if you join this point, then it is point C. So, if an individual is going to have 18 year of schooling, then he is going to have 30,000 in the wage rate in the labor market per annum at point D. Now, if we join all these points, we will get a curve like this. Now, this curve is so explaining that different combination of year of schooling and the wage rate which are there in the market. So, this curve, this Wage-Schooling Locus explains certain properties. Now, the property of this first property of this Wage-Schooling Locus is that it is upward sloping. Now, the point is that why it is upward sloping? Because workers who have more education must earn more as long as educational decisions are motivated by only by these financial gains. So, higher education will lead to higher wages. So, to attract educated workers, the employers must compensate those workers for the cost incurred in acquiring education. So, therefore, this Wage-Schooling Locus is upward sloping. The second property is that the slope of the Wage-Schooling Locus, which is nothing but the delta W by delta S, means change in the wage rate due to the change in the number of schooling. It tells us that by how much the worker's earning would increase if he were to obtain one more year of schooling. So, the slope is talking about that what will be the additional year of if he is going to get one more year of schooling, then how much wage is going to increase. And the third property is that the Wage-Schooling Locus is concave. Now, if you look at this Wage-Schooling Locus and the properties, first it is talking about that to attract educated workers, the employer must compensate those workers for the cost which is going to incur for acquiring more education. And the slope of this Wage-Schooling Locus is the empirical measure of the rate of return to school. And when we talk about this concave, that the Wage-Schooling Locus is concave, then the monetary gains from each additional year of schooling declines as more schooling is acquired, which means the law of diminishing return also applies to human capital accumulation. So, each year extra of schooling generates less incremental knowledge and lower additional earning than previous year. So, therefore, the Wage-Schooling Locus is concave, and it is guided with the law of diminishing return. Now, when we talk about this Wage-Schooling Locus is guided with law of diminishing return, we can say that now you can see when you are going to add one more year of schooling, then the additional value which is going to be added to the wage rate is just 3,000 rupees. So, one more year of schooling is going to add 3,000 dollar additional to while having 13 year of schooling. As you increase one more year, then it is $2,000. As you increase, so the increment happens in a very diminishing, it increases, but at a decreasing rate. So, the marginal rate of return to schooling, it is nothing but the percentage change in the earnings results from one more year of school as the marginal rate of return to schooling. So, the marginal rate of return to schooling is nothing but it is the slope of this Wage-Schooling Locus. So, each additional year of schooling generates a smaller salary increase and it costs more to stay in school. So, in other words, the wage increase generated by each additional year of college gets smaller. At the same time, the cost of staying in the school keeps rising. So, the marginal rate of return schedule is therefore declining function of the level of schooling, because at one point you can see that the increase in the wage is declining, but the cost of getting one more year of education is keep on increasing. So, that is why the net marginal rate of return overall it declines, because in the numerator it is increasing at a decreasing rate, but at denominator it is increasing at an increasing rate. So, the slope of this Wage-Schooling Locus, which is nothing but delta W by delta S, means change in the wage rate by change in the year of schooling, tells us by how much earnings increase if the person stays in school one more year. So, you can see in the figure, for example, the first year of college increases annual earnings in the post school period just by $3,000, 20,000 to 23,000. So, the percentage change in the earnings from getting this additional year of schooling is just 15%, which means 3,000 by 2,000 into 100. So, in other words, the worker gets a 15% wage increase from staying in school and attending first year of college. So, we refer this percentage change in earnings resulting from one more year of schooling as the marginal rate to marginal rate of return to schooling. So, the marginal rate of return to schooling gives the percentage increase in the earnings per dollar spent in educational investment. Now, to see why, suppose that the only cost incurred in going to college are foregone earnings. Now, the high school graduate who delays his entry into the labor market just by 1 year is then giving up this $20,000 which he could have earned by entering into the labor market. So, this investment outlay, this cash flow now increases his future earnings by $3,000 per annum, which means he is going to yield an annual 15% rate of return for the first year of going to college. So, the rate of return on education is 15% just by adding one more year of college. Because this Wage-Schooling Locus is concave, the marginal rate of return to schooling must decline as the person gets more schooling. So, for example, the marginal rate of return to the second year, the first year it was 15%, the second year you can see it is going to be only 8.7%, which is just an increase of $2,000 from 23,000 to 25,000. So, when he is adding one more year of schooling to 13 to 14, now you can see that it is going to add just $2,000 per annum. So, the percentage is just 8.7%. So, each additional year of schooling generates a smaller salary increase in and the cost more to stay in school. Therefore, we are going to have a diminishing marginal rate of return and the Wage-Schooling Locus is concave, which means the wage increase generated by each additional year of college gets smaller. At the same time, the cost staying in school keep on rising. So, the marginal rate of return schedule therefore is a declining function. We can derive it from this Wage-Schooling Locus. So, the marginal rate of return schedule gives the percentage change in the annual earnings resulting from each additional year of school. Suppose the worker has a rate of discount which is R, which is constant, and that is it's independent of how much of schooling he gets. So, the rate of discount schedule therefore, we can have it's perfectly elastic in nature. So, the question is that which level of schooling the person should choose. It turns out that this intersection of this marginal rate of return curve and the horizontal rate of discount, that determines the optimal level of schooling for the workers. Now, to understand this mechanism, we can derive the marginal rate of return from this Wage-Schooling Locus. So, Wage-Schooling Locus is it's upward sloping, it is concave, and the slope is it declines, it guided by the law of diminishing marginal return. So, adding one more year 12 to 13, you are going to add 15% marginal rate of return. Adding from 13 to 14, you are going to have 8.7% rate of return. If you keep on adding this marginal rate of return on education, the slope is going to decline. So, every time you keep on adding, the slope is going to decline. So, we can derive this marginal rate of return curve. On this side we have taken the year of schooling, on this side we have taken the rate of discount or the marginal rate of return by which the worker discounts his year of schooling. Now, you can see in the first year it was 15%, second adding one more year it is 8.7%, adding one more year it is going to decline. Therefore, the marginal rate of return is declining, it is the slope, the curve is declining. Now, if the individual is having a constant discount rate, let us say R, and it is perfectly elastic in nature, it is given, it is constant. Now, how many years of schooling the individual should have? Then it is going to be the S star is the number of year of schooling one should choose, by which he can maximize his future returns in terms of present value. So, now question is that why it is S star, why not any year of schooling prior to this S star or any year of schooling after this S star. So, this stopping rule maximizes the worker's present value of earning over the life cycle. Now, this S star year is going to give you the maximizes the present value of the earnings of the individual. Now, to see why, suppose that the worker's rate of discount equals the market rate of interest rate which is offered by the financial institution. So, let us say assume that the worker is assuming taking the discount rate which is the discount rate or the interest rate which is available in the financial institutions. Now, question is that would it be optimal for the worker to quit the school after this completing only the S dash year of schooling? No. If the worker were to stay in schooling for additional one more year, he would forego let us say W dash wage rate earnings in the labor market. However, the rate of return to this investment equals to R dash. So, this alternative would be to quit school and work and deposit this W dash dollar in the bank that offers the rate of return only R. So, in that case, the rate of returns to education is much higher than the financial institutions, those who are giving the interest rate only R. So, therefore, it is advisable for the worker that he should continue for schooling. So, by increasing one more year of schooling, it will increase the present value of the earnings and he should continue in school. While the opposite will happen if the worker that gets more than S star year of schooling, then it shows that the marginal rate of returns exceeds that what schooling is going to is less than the market rate of interest rate. So, the extra year of schooling that are not profitable. So, the stopping rule says that the individual should stop that year of education at that point where the marginal rate of return equals to the discount rate or the interest rate at which the individual is going to discount. So, the stopping rule for the schooling investment describes the general property of optimal investment decision where the marginal rate of return equals to the interest rate. So, to wealth maximizing, if we are considering a student who wants to maximize his wealth, he must decide that if he should quit school and face the same economic trade-off as the owner of a forest who must decide when to cut down the tree. So, the longer the tree is in the ground, the larger it gets and the more number of and the revenue it will eventually generate. But there are certain foregone profits. So, there are certain maintenance costs to have the tree in the ground. So, the tree should be cut down when the rate of return on investing in the tree equals to the rate of return on alternative investment. So, one has to take a decision where how much year of schooling he should have, is that where the marginal rate of return from schooling is equals to the rate of return which is in some alternative investments. So, it is important to emphasize that the decision of whether to stay in school is influenced by many factors, such as it is just a kind of there is some chance to encounter with some influential teacher or significant authors. So, it is not just the dollar value of the earning stream. So, it has been observed sometimes the individuals they go for higher spend more year of schooling due to some other factors, non-economic factors. So, there is also a great deal of uncertainty in the reward to particular type of education. So, the assumption that the student knows the shape of the Wage-Schooling Locus and the marginal rate of return provided by each level of schooling then becomes false. So, the uncertainty leads to some questions on this that how much year of schooling someone should take based on this principle, that this margin. And the economic and social conditions changes in very unpredictable way. There are uncertainties and there are certain unpredictable outcomes in the socio-economic context in the at an aggregate level in the economy. So, it is very difficult to forecast how these shocks shifts the reward to the particular type of skill and career. So, this uncertainty will surely play a role in our human capital decision, just like uncertainty in the financial market which affects our financial portfolio and maximize our wealth. So, the schooling model tells us how a particular worker decides that how much of schooling to acquire, and as a result also tells us that whether a worker places in which income distribution in the post school period. Now, if the workers who gets more schooling earns more, although they also give up some more when they decide that they will go for more year of schooling. This model isolates two key factors that lead different workers to get different level of schooling and therefore to have different earnings. So, sometimes the workers have different discount rates or face different marginal rate of returns, or sometimes they are differ in terms of their ability. So, definitely the outcome is going to be different, that how many years of schooling one should take into consideration when the workers differ in terms of the discount rate or differ in terms of the ability. So, in summary, we can say that a dollar received today does not have the same value as a dollar received tomorrow. So, the present value of the future income received gives the value of that amount in terms of today's dollar. So, the Wage-Schooling Locus gives the salary that a worker earns if he or she completes a particular level of schooling, and he is going to get that return in future. His income stream is going to happen for next 20 years or 30 years for a time, as long as he stays in the labor market. So, how many year of schooling one should take into consideration, it depends on that. When the worker looks at this how much he is going to earn in future and discount it into the present value. Based on that, he takes the decision that how many years of schooling he should have, and based on the marginal rate of return. So, workers choose the point on the Wage-Schooling Locus that maximize the present value of lifetime earnings. In particular, the workers quit school when the marginal rate of return to school equals to the rate of discount. So, that is the stopping rule, where marginal rate of return from the education equals to the rate of discount. So, that is the stopping rule one should follow, but it is very difficult to find out exactly that stopping rule. So, in our next lecture we will discuss about the difference in earnings occurs because there is difference in rate of discount and difference in ability. So, based on the difference in discount rate and the difference in ability, the individuals prefer that how many years they should go for school, or there will be a dropout from the school. So, based on that they enter into the labor market and they earn the wage rate. So, difference in earnings happens in the labor market which is based on the discount rate and ability, which decides that how many years of schooling they should have. So, we will discuss all those things in our next lecture. Thank you.